Hey, today I'm going to do something a little different for you here at the Rare Advisor, but I think you're really going to enjoy it. What I'm doing is I'm sharing a discussion that I had specifically designed for retail investors, clients of USA Financial Formulas. They've been put into these various models and criteria here with us at USA Financial Formulas by their independent advisor that they work with. We work with advisors all across the country, obviously. But more importantly, the discussion that I'm having is about the undercurrents and the undertone and the jockeying for position that's taking place inside of the market, but kind of underneath the index, if you will, underneath the S&P 500 line or the Dow Jones line or the Russell line or whatever it is you might be looking at. What a lot of people don't realize is since we saw that depression in the initial stages of the pandemic and then the rebound of the market since then, the bull push is obviously, seen by everyone, but not understood by everyone. And within that, underneath it, layers, if you will, there's been flipping and flopping and jockeying for position in terms of what's driving the market up and then maybe what's tugging the market down. And those things have changed and have moved and have radically adjusted over the last number of months. So all of that gets kind of discussed in layman's terms. I think you're really going to enjoy this. And as always, if you would like to work with us on your own portfolio development, utilizing some of our tools, obviously, give us a call. Thanks.
Welcome to the USA Financial Trending Report podcast, a candid and educational discussion regarding the state of the markets, economy, and other factors that may impact your investment accounts. The host of this podcast is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. This podcast is educational and not intended as personal financial advice. Seek the help of a qualified financial professional regarding any strategies discussed. Investing carries an inherent element of risk and includes the potential for loss of principal and income. Past performance is no guarantee of future results, and your actual results may vary.
Hello and welcome to the Trending Report for July 2021. My name is Mike Walters. I am CEO of USA Financial, and right out of the gate, I'd like to acknowledge my lack of professional dress. I've just gotten a quick run-in from vacation here in order to share this time with you. Don't have my most professional-looking shirt from my wardrobe with me, and somewhere along the way at a cottage on Lake Michigan, I lost my razor for a few days. So please accept my apologies for the unusual look. But nonetheless, I think you'll really appreciate and enjoy the information we're going to go through today. Most specifically, I want to talk to you about scoring the stock market based upon power, support, and demand. It's a way to understand the different undercurrents that are taking place within the overall market. So I mentioned Lake Michigan a moment ago. So a good example would be Lake Michigan has different currents and things taking place beneath the surface, if you will. So as a quick example, a few days ago, Lake Michigan was unusually cold, even for being Lake Michigan. It was 62 degrees in Lake Michigan the day that myself and some of my children were spending some time on the water with my wife. Now, I say my wife last because she was not about to get into that water. But the rest of us did venture in. Very, very cold, unusually cold because, by the way, we've had a lot of hot weather. What had happened is the lake had turned over. There are currents underneath the lake, underneath the surface, if you will, and literally the lake will, at least what we call here locally, turn over. Now, there's probably a better scientific term for that, but nonetheless, anybody from around here, Michigan, Wisconsin, Chicago, they're going to know what you mean if you say, hey, Lake Michigan turned over, it's really cold, or it's really warmed up. Because what happens is literally the water from the bottom of the lake comes to the top, and the water from the top of the lake goes to the bottom, and all of a sudden all that cold water from way down deep, hundreds of feet down, is now up at the top of the surface, hasn't had a chance to get warmed by the sun, and all of a sudden you're swimming in 62-degree water. What was really interesting though is just about 2 days later, the lake had turned again. It had flipped over and it had increased by a little over 10 degrees. It was about 73, 74 degrees in the water, much, much nicer. That water had gone to the bottom. It wasn't down there so long that it really got super cold and then it came back up. So it wasn't as warm as it would be if the lake just stayed kind of in one place, if you will, and allowed the sun to heat it up when we've had, 70, 80, 90-degree days. But nonetheless, much warmer. So there's all these undercurrents taking place beneath Lake Michigan. And The same thing happens in the stock market. So in the stock market, just because the S&P 500 or the Russell 3000, which is generally kind of probably the most common index for the overall all-encompassing stock market. If the Russell 3000 or the S&P 500 is going up or going down, what happens is underneath that there are subsets that are either taking the charge and helping to elevate, or also going the other direction, kind of dragging it down. And so we track all this and we measure it to kind of see where the hot spots are, what's taking place in the market. So what I'm going to share with you is that data, and I've lined it up in kind of a graphical format so you can see how we actually score the stock market, again, based on power, support, and demand. So let me share my screen with you and we'll jump right in. First off, let's look, and by the way, we will have this PDF available to you. So if you would like to pull these documents down, you're welcome to do that to take a look as well. But here we are on page 1. We're going to talk first about market capitalization. So the various indexes that make up the stock market, everything from small cap all the way up through large cap. So whether you're looking at the Dow Jones Industrial Average, the S&P 500, S&P 100, the large cap stuff, all the way down to the S&P 600 or the Russell 2000 for the small cap. So what you'll notice here, first of all, is this blue band is the Russell 3000. That's the overall market. So generally speaking, what we're looking for is anything above this Russell 3000 band in terms of how we score it. Anything above that is essentially driving the market. It's helping to elevate the market. It's outperforming the overall market. Anything below that is doing the opposite. It's performing below the overall market. It's in theory kind of dragging the market down, if you will. And then down here, the gray bar. The gray bar is the 1 to 3 month T-bill. So essentially, it's the equivalent of cash. So this is where, just cash, the dollar, if you will. So when things start falling below cash, then they're generally not performing very well at all. And as you can see, we have a few items down there. Now, what's interesting is when you look down here, what you're going to see is here's the S&P 600, here's the Russell 2000, here's here's the value side of the S&P 600, the value side of the Russell 2000. We do have the mid-cap 400 value here. And actually, if we even go up a little higher, here's the other mid-cap. My point is you're seeing small to mid-caps down at the bottom on the scoring. If we went back about 6 months or so ago, you saw the exact opposite. It was the small cap growth that was small cap growth and value, but small cap value, I should say, more in particular. I misspoke when I said growth. It was small cap value that was driving the market about 6 months ago. Today, if we look up here at the top, what you're noticing is what's really driving the market today is large cap growth. So we went from small cap value to large cap growth inside of the same bull run. So if you're just simply looking at the S&P 500 or the Russell 3000, it might look like it's kind of steady eddy, but really the undercurrents beneath that have changed dramatically. Now, if we come over here to market sectors, we see similar things taking place. I keep the blue band for the Russell 3000 as an overall example of what the overall market's doing. Again, we're keeping the gray band for where essentially cash is at. I shouldn't say dollar, I should say cash, where cash is at. And then what we're seeing up here right now is information and real estate. That's what REITs are. And telecom and so on is up here. And then down here, we're seeing energy and financials in this range. Now, what's interesting again is there was a flip here as well. If we went back 6 months, we saw energy and financials were actually running hot, and we were seeing real estate, especially with the pandemic, was running very cold, was much further down the list. Now, if we take a similar look at international markets, here is the overall U.S. market, the Russell 3000. And as you can see, at least from our collection of kind of representative international markets, the U.S. market is outperforming all of the other internationals. But then again, here's cash. So we're seeing Brazil, Taiwan, the overall world stock. India is kind of up here in this upper range. Again, still below the U.S., still below the Russell 3000, but on the higher end of international. And then down at the very bottom, you can see some of the Asian markets, which are really at the lowest level, falling below that 1 to 3 month T-bill scoring. And by the way, I've referred to the scoring. I should have said this at the outset. Here's what we're doing. We're pulling the demand score, the support score, and the power score. The power score is kind of a long-term calculation, identifying the long-term power, if you will, of that particular subset of the market. In this case, we're using ETFs to represent that. And then the support is showing the shorter term support, if you will, for what's going on in terms of the scoring. And then demand is think kind of like bulls versus bears. Are the bulls winning the day? If they are, it's going to be a positive number. And the more strongly they are, the more positive the number will be. If they're losing the day, it'll be a negative number. And again, if the bears are really winning, then it's going to be a significantly negative number. Now, again, you'll see sometimes some negatives popping in here, even though the overall score is positive. And that's because this is an aggregate of these three. We're just simply adding them together to get the overall score. And as you can see, right around the cash level is where we hit 0 or turn negative. And you can see that on each of them. So let me back up very quickly to the screen before, and you can see the same thing. So here's our scorings. And as you can see, here's the 0 line when we first turn red or go negative based on this column. And then the same thing we're seeing over here in the sectors. Now, if I come back forward, we just talked about international. Let's quickly talk about bonds and defensive positions. So right now, the only thing scoring above the overall market would be a commodity bundle, this particular ETF, which represents some commodity, a variation of different commodities. And then what you'll see here is, all of the rest of the bonds. Now, you'll notice what is running the highest is the long-term treasuries and long-term corporate bond holdings are what are performing the best. Again, it's defensive. It's below the market. So if we looked in the early days of the pandemic, you would have seen the opposite. You would have seen a bunch of these running higher than the market. Today, they're running lower than the market. Now, here's cash itself. So these bonds are doing better than cash. But then some of these, especially the shorter term stuff, is actually doing less than cash is in terms of driving its subset or its market. So this gives you a very good idea of what's happening inside of the market, how things are turning and churning underneath it. Because again, for example, right here on this page, India used to be ranking #1 here, and it's been a bit on a slide. And you can watch and see, does this continue to slide? And maybe we can even revisit this next month and dig a little deeper. But this is a great way to get an overall perspective of what's going on in the market. Although we just spent time here on the international markets and on the bond and defensive, I would say in terms of equity viewing of the market, here's your two main areas. This back to page 1, market capitalization. How are we seeing the difference between small caps and large caps? And are we seeing a difference between value and growth? And then over on the sector side, which sectors are performing, which sectors are lagging, and how that gets scored out. So very interesting stuff. It helps to understand how formulaic investing works by seeing kind of the underbelly of how things get scored. I hope you find this really interesting. The market has been doing very well. Thank you so much for your continued confidence and trust in USA Financial Formulas. We're very excited to see the rebound that has taken place since the pandemic, since the lockdowns, as the economy is freeing up. The market is continuing to thrive. So for a while, it was thriving on stimulus. Today, we're trying to hire. We're finding scenarios where, the jobs are going unfulfilled. And so there are some issues in the economy. Don't get me wrong. But so far, we're continuing to show the strength that had existed in the U.S. economy prior to the pandemic is continuing to now exist in a post-pandemic environment. So thank you so much, and we'll be back again to chat next quarter. Talk to you soon.
Thanks again for listening to this episode of the USA Financial Trending Report. To gain instant access to this monthly Trend Tracker publication, or to find out more about USA Financial Formulas, simply visit usafinancialformulas.com. Any USA Financial Formula strategy may underperform or produce negative results. The strategies and screening tools discussed in this presentation are only tools designed to move assets into or out of the market based on various economic and market indicators. These tools do not guarantee specific results, and even with the application of these tools, it is possible that your account will lose value. Research partners mentioned are independent companies and not affiliated with USA Financial Formulas. You should only invest in the USA Financial Formulas upon receiving and reading the Formulas ADV.